Hello, I'm Kerry. I'm a retired financial advisor, was part of the Ameriprise system. I recently took a extensive course with Goldman Sachs on how to identify stocks or how to identify companies that are seizing growth opportunities and will then grow in the future. And what they taught me is that whenever a company sees a growth opportunity and wants to take advantage of it, they do basically two things. First is they borrow money to gear up, and secondly, they hire people. Well, I think we have the growth opportunity of a lifetime in front of us as a part of artificial intelligence. And I think there are a number of companies that have recognized that growth opportunity centers around semiconductors, data centers, software, hardware, to deliver artificial intelligence to us, much as they 20 years ago, 25 years ago, delivered the internet to us. But I think because of the impact that artificial intelligence will have, that is all the knowledge in the world at our fingertips, it's going to be far more reaching. So what I decided 2 years ago, shortly after Sam Altman introduced AI through ChatGPT, I need to come to understand this industry totally and who the players are and who are going to be the winners and losers. And so what I set out to do was study semiconductors and artificial intelligence and how it would be delivered. And I created a spreadsheet, and it holds the names of the 60 stocks that I believe are going to be the key players in all three developmental stages of AI. That is the building of the language, large language platforms, the gathering of the data, the condensing the data and putting it in data centers, and then building those data centers out so that they can deliver the product to you and I and everybody in the world. And the product is going to be far beyond our imagination. That's the one thing I am sure of. So with that in mind, I said, okay, what are the elements that Goldman Sachs taught me? And that is, who's hiring people, who's putting money into research and development, who's buying Jensen's chips, who's buying Micron's chips, who's buying the data centers and building them out, and how is that going to materialize, and what is the time frame that it's going to happen, because the build out has to happen before the delivery does, much as in the internet. The build out had to happen first, and so the people who put down the coaxial cable and created the infrastructure were the ones who initially had growth in their stock. That's what we have to identify here. So again, what I then do is I break the companies down into 5 different categories that give me what I call tells, that they're doing something that it tells me that their stock price is going up in the future. And the easiest way to take advantage of that is use Wall Street and their data. And that is, they sit down every quarter with these CEOs and CFOs and ask them, how are you doing? And what do you project the future to be? And Wall Street comes up with projections of what their earnings per share is going to grow on a quarterly basis going forward, usually about 3 years. So with that in mind, I say, okay, they're telling me how their earnings per share are going to grow, and that's the basic, what we're looking for, is companies that are going to make money, increase their margins, and grow their business and bring it to the bottom line. So if I know what the earnings per share are going to be 1 year, 2 years, and 3 years in the future, now all I have to do is figure out what is their probable PE ratio on January the 1st of 2028, and I do some research in that area, and that's the first column that I show you on this sheet, and that is how does their earnings per share growth relate to their projected PE ratio. And that then, dividing those two into each other, I come up with a PEG ratio. And that tells me if they're currently underpriced or overpriced. Let me take you to my computer and show you exactly how I do this, and then how I project out what is the price of that stock most likely going to be based on the 5 criteria that I set up on January the 1st of 2028. What is the differential from what it is today, and where am I going to get my largest gains? And that's where I will then allocate the funds that I have available and then monitor it on a continuing basis to see where I want my money at what point in this build out and development to maximize my portfolio. And what I'm trying to do is double my money in that between now and January of 2028. And I think I can do it, and I think I have the plan, and I'd like to share it with you. And when I say share it with you, I want to send you a copy of this for free. Okay, this is the sheet I was sharing with you, and this is when I share it over the internet with you, this is what it'll come looking at like. It's quite extensive, and you just take this bar and slide it over, and you can see the 3-year price projections, and then you can take it down, and you can see it goes all the way through from Apple to XYZ. And there are 60 stocks that I evaluate. I evaluate them on a number of parameters. One, and I think most important, is are they going to show profits in the future? And are those profits better than other stocks where I can choose to share my money? So Apple is telling me they're going to grow their profits or earnings per share by 11% per year over the next 3 years. That's the average. Whereas I come down here and I see COHR says they're going to grow at 51.6. Apple has a PE ratio of 32. COHR has one of 26. If I divide their earnings per share into the PE ratio, it tells me that Apple's PEG ratio is 2.9. A 1 is fair price. Okay, what is CHR? Oh, they're our CRDO. They're 0.69, even though their PE ratio is substantially higher. It's because they're projected to grow their earnings at a much higher rate. So I do that with every stock, and then I rank them accordingly. The next thing I do is I say, okay, if their their share price grows at the same rate that their earnings are going to grow over the next 3 years, what is their share price going to be in the end of 2027, the beginning of 2028? Well, Apple's will go up from its current price of $234 to $321. That makes it the 50th best performing stock of them. If I come down here again to CRDO, its current price is 67 or 76.67. And if it grows at a rate of 200% per year over the next 3 years, it's going to become $2,700. Is that likely? Probably not. But what it does is it gives me a relationship. Then one of the things I like to look at is what does Wall Street project their price is going to be in the future. Apple's is at 234. And Wall Street says it'll be 243 in the next year and a half. So that means it's going to grow at about 3.5%. Well, let's see what Wall Street thinks. COR, it believes it's going to grow by 24.9%. So that gives me some insight. Another criteria I like to look at is, what if we assigned all 60 stocks the same PE ratio on January the 1st of 2028, and then we multiplied that PE ratio times what Wall Street tells me their earnings per share will be in 2028. Now we have a level playing field, and we can compare growth to growth at the same PE ratio. And what I find is with Apple, their projected earnings per share in 2028 is $11.67. If I multiply that times 25, their projected price is $291.75. Well, let's see how does that compare to our COHR. And what we find is that if their projected earnings per share is $6.46, if we multiply that times 25, that says their share price will be $161.50, or an 81% return on our current investment, as opposed to Apple's is 25. And you can see I do that for every stock. Here is AMD, Advanced Micro Devices, showing 145% potential gain. Here is Dell's showing a 179% potential gain. And here is Iran Energy showing a 291% gain. Then I look at some other criteria because, again, as I said, Goldman Sachs taught me that if a company is in a growth mode, it's going to hire more people. So I go in and I look in over the last 3 years, how has each company's workforce grown? Here it tells me that ACMR's workforce has grown by 81%. That makes it the 8th best company in the group. I see that AMD's has grown by 106%. That makes it the 5th best. So I put all these things together. I add into their past history, their 5-year average growth, and I do the research and I find that ACMR has grown an average of 81 or 80.64% per year over the last 5 years. So if it's having a bad year because of some extenuating circumstances, quite possibly its future will be better. I then factor that into my algorithm and come up with some projections. The next area I look at is, what do these companies do and how are they doing comparatively? And that's where I do a deep dive. I do a 15-minute podcast that looks at the current news and the current developments and the last quarter's earnings reports and gives you a 15-minute synopsis of what is Apple all about and where do they fit into the future. If you would prefer it in a written format, I give you a briefing. I do that for every one of the stocks. The briefing is something I've just recently added, so I'm catching up. As each stock has its earnings report, I will do not only a podcast, but a briefing. Because I want you to have a place that you can go and you can say, okay, I don't quite remember what this stock does, and you can quickly find out. So that's what that is. Then the latest development that I've added is, okay, what do I own today and what do I want to own on 2028, January 2028, based on the current information that I have on a daily basis. So for my benefit and my benefit only, I put down, this is what I own today. I own 50 shares of Apple. Its current price is, or its price on February the 10th was $227. And I want that to stay stagnant because I want then to project, am I achieving my goal and the return that I expect on Apple over the next 3 years, or am I falling behind? So I want that number to be stagnant, and it will stay as it is. So my current value of my Apple holdings is $11,733, and it represents 2% of my portfolio. Well, based on its 3-year return of 30%, I only want it to represent 1.4% of my portfolio, so I'm going to keep it at 50 shares. Then what I do is I go down to here, AEHR. Currently I have 3,000 shares, but because its growth is only at 92% over the next 3 years, I want to cut that down. I want to bring it down to 1,850, and I will do that, and I will keep this sheet updated so that you can see what I'm buying and what I'm selling on a daily basis. And I do that for every one of my stocks. My number one stock, I'll be open with you, is Iran Technology. It's projected to grow at 410% over my holding period. I have what I want of it, 2,400. I'm not anticipating adding any more to it. But as we were talking about COHR, I currently have 110 shares, but it is projected to give me a 94% return. I anticipate buying in at the right price to bring that up from 110 to 275. So overall, based on this, I say my current portfolio of 756,000 will grow to 1,000 or 1,433,000, almost a two bagger. Okay, so that's what I do. And the beauty of this is it puts it in a format that as things change on a daily basis, as I learn, I can change and I can adjust my portfolio to reach my goals. Now, do I think these numbers are in stone? No. I think some of these companies will outperform what I'm projecting, and I think some will underperform. But if I'm monitoring it on a day-to-day basis, I can make the appropriate adjustments so that I can achieve my goal. I think it's important. If you manage anything, you have to have a goal. And if you don't have that goal written in stone, then you aren't going to achieve it. So I have written the goal in stone, $1,433,000, and then I have created a plan over here and how I'm going to implement that plan over here. Now, what I want to do is this is on a Google Sheets. I am able to share it with only so many people. So I'm going to put a link in the description that you can go and share this. And I'll give you a week so that you can share it and then other people can come in. And then if you want to gain access to it for the rest of your life, you can sign up for our gold platform. That's where this comes. It costs you $19.99, $19.99, I believe it is, per month. And I think it can help you become a better investor. Take a look at it. Give me some feedback and see if this isn't the way that you want to invest. Knowing what you own and then creating a plan to achieve your goal.